Austin is on just about everybody's list for the top markets 2011, including ours, but the Texas state capital is off to a kind of slow start so far in 2011. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Austin update. Last week we told you about Washington, D.C., a market that saw big revenue growth in 2009 and most of 2010 until it really stalled out in late 2010 and the early parts of 2011. Austin is a pretty similar story. Occupancy is still climbing, but just barely, not to the level seen earlier, and rents are still improving, but not to the degree we had expected at this point. But like D.C., we don't see these results as particularly concerning thus far, probably just a speed bump. Here's some good news for Austin. Quarterly demand has now been positive in 9 straight quarters in Austin. Not a big number in 1Q specifically, just over 300 units absorbed, but on an annual basis, Austin logged demand for 8,140 units. Strong performance. Annual demand numbers have been trending down a little bit since peaking in 2Q 2010, but these are still very good numbers. But with demand cooling down a bit, occupancy growth has slowed to just a trickle over the past 2 quarters. Occupancy had been storming up from 89.9% in 4Q 2009 up to 93.3% by 3Q 2010. That's 3.4 points of improvement in just 3 quarters. But in each of the past 2 quarters, occupancy has improved just 0.2 points. And how about rental rates? Well, this is a pretty interesting story here. On this chart, you can see Austin cut rents on a quarterly basis every quarter between 4Q 2008 and 2Q 2010. So, in other words, rents were still going down even as other fundamentals were showing improvement. But then in 3Q 2010, same-store rents shot up 2.5%. So at that point, with demand at such high levels, occupancy improving, and supply falling down, there seemed to be a clear path for Austin to keep pushing up rents. But the increase has really dropped off in the past 2 quarters. Not bad by any means, but certainly below expectations. Quarterly effective rent growth was just 0.6% in 4Q 2010 and 0.2% in 1Q 2011. Year over year, rents are up right in line with the U.S. norm, just over 3%. As we've seen across the country, especially in the South, the top-tier submarkets are really leading the way in the recovery process. Take a look at the top 3 submarkets in Austin as of early 2011. Northwest Austin, In-Town Austin, and Southwest Austin. These are Austin's 3 most expensive submarkets, and, not coincidentally, they are also the Metro's leaders for both overall occupancy and annual same-store rent growth. You see occupancy rates of 95 to 96%, led by Northwest Austin at 96.4%, and Northwest Austin also leads for rent growth at 6%, with Southwest Austin and In-Town not too far behind. Going forward for this metro, we still like it a lot. We expect occupancy and rents to start improving again, especially on the rent front, with new supply levels really falling down. Austin's a market where jobs have essentially come back to the level seen prior to the recession, so there just isn't much holding this one back. That wraps us up for Austin. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.